There are 4 different ways we can tokenize real estate. The first way is a simple token. That is a token that is equivalent to the ownership on a house. That is the simple way. The next way that we can tokenize real estate is dynamic tokenized real estate. And what this is it's a dynamic NFT that's going to not only be the ownership of the house on chain, but also bring in other important data points relevant to that house, such as when it was updated, when permits were filed, the price of the house, you name it, and that will all be on chain. The third way that we can tokenize real estate is fractionalized real estate. What this means is that we can break up the ownership of the housing asset. So we can have multiple people own a singular asset and break it up into multiple tokens. That way, as you see here, we can have 10 different investors owning a single asset and not have to go through any intermediaries to do so. It's all done on chain. And then lastly, we can have tokenized real estate cash flows, which is tokenizing the yield from these real estate assets. And so if you have a house and you have somebody owning that house, let's say a company owns that house and they want to generate a yield for this house for their investors, they can sell that yield as an investment product to investors and then give them a percentage of that yield, so that if this company is getting $3,000 in rent and they want to give $2,000 of that back to their investors, if they have 4 investors, they can make 4 tokens, and thus each investor would get $500 a month in that yield. So this is showing that there are multiple ways to tokenize real estate, and bringing real estate on chain is going to provide so much visibility to the real estate market and housing market as a whole.